Welcome back. Now, EOH has reported a narrowing of its losses. The technology group says it has improved its capital structure, resolved many of its legacy issues, and is now poised to enter a new growth phase. EOH Interim Group CEO Marius joins us now with analysis of that performance and an outlook for the group. Thank you so much for your time, Marius. Just to start off the conversation, just frame that performance for us from a bird's eye view, and really also the investor reaction, because we did see that stock surging there by about 9% today.
Thanks. Good afternoon, and thank you for the opportunity to share some of the news with you. I think to frame the performance, FY24 was a steady year. I think the highlights are well documented in the press. We were very excited that we could look past two major legacy issues that did position us well. It has been a drag for us over a period of time. I think the financial performance continues to improve. We're looking for a business that is now set for growth. We embarked realistically, since my appointment end of May, early June, on a three-part strategy. And so we started in that era with the cost cutting, which we felt needed to be changed post the closing out of the legacy issues. So I think in all the results which we've shared, we've got a strong pipeline. We're very happy with the growth that we've shown in certain areas. We certainly quite excited about the next phase. And based on the questions that you'll ask me, I think I'll share a little bit more in detail as we go. But yeah.
All right. Well, growth in certain areas, but maybe not so much in some, because I did notice that your top line, there's still some softness on that front. What are the drivers of, or the biggest pressure points at this point for EOH there?
Yeah, we suffered some pressure in sort of three different areas. We had some in our connected industrial ecosystem business. We had delayed projects, which we didn't land in FY24, sadly, which were pushed out to FY25. We are quite optimistic that we could grow them. The second area where we suffered some pain was in the enterprise application business, which as a result of certain restructuring that had to take place, we reorganized that business and positioned it well into FY25. And then I think the growth that was in the other areas, had it been more, we wouldn't have produced flat results. So we're looking to capitalize more on the growth areas, make the industry growth areas grow more, and certainly minimize the areas that were suffering under the revenue pressure, as you articulated.
Yeah. You talk about that restructuring as well. I do also notice that operating profit did experience a slump, and one of those reasons being the restructuring costs. How much of a weight are those costs still carrying for the business?
Yeah, so we took the restructuring costs into FY24 by choice. I think what's important to realize is we've come through two very different phases. We're certainly not a business that in the last 3 or 4 years has experienced normality. I think what we endured was quite unique to us as EOH. It is part of our legacy. It's part of our background. And for that, we required a structure to deal with those abnormalities that were in the system. With us closing out 2 of those big legacy items last year, and in November reorganizing ourselves into 3 distinct clusters, what we were then able to do is do away with those group costs that were there to provide and solve the previous issues. And so we took those costs into FY24. The costs of the restructure we took into FY24, the actual cost savings, which we disclosed, which we somewhere between 160 and 200 million, are going to endure through to FY25, which was the whole idea about positioning the business for growth.
Marius, the big question, of course, is when do you get back to profit?
Yeah, so we from an outlook perspective, quite optimistic that we've structured ourselves to be profitable in FY25. I think we had to get through the first phase, which is the cost rationalization. Naturally, the revenue growth is going to determine the next level, because we believe we are in the correct shape to harvest the profits. But I think we're going to manage it very closely and see from there whether we've done enough or not. As we speak today, post our results, we're quite optimistic that we're on the path to profitability.
I mean, you spoke about the highlights and that, growth will depend on you capitalizing on those growth areas. So how are you investing for growth in the short to medium term?
Yeah, I think when we speak about investing, I think it is important that, with our legacies, we've been quite cash constrained in paying for the legacy debt.
Yeah.
Didn't really give us much headroom to invest in the areas that we wanted, which is why we undertook the cost rationalization program. With the cost rationalization program, we also reorganized ourselves into the pillars that we disclosed in the results today. We firmly believe that with the customer base that we've got and that we've had over a period of time, without having the drag of the legacy payments, and to be able to invest in that cluster that we've currently organized ourselves as, we're hoping to extract revenue from our existing client base. And naturally, if we get that right, new customers will also get added. I'll probably close before I go back to you to say that a big portion of the opportunity sits in revitalizing our engagement with the public sector as a result of closing out legacy.
And actually, I was going to the next question I was going to ask you was actually about what you are also pegging your growth on in terms of the macroeconomic environment. You talk about revitalizing those interactions with the public sector. Is the GNU giving you optimism of a longer runway for growth?
I mean, I think it's quite important. Our success is inextricably linked to the success of our customers. The more they grow, the better we grow. So hopefully the GNU creates some growth opportunities for our customers. And as a result of that, they'll grow. Should that be quite muted, where we still see a positive outlook, is the fact that, we don't like to use the word in the technology, but there's definitely a revolution underway at the moment where people are trying to keep track of the digitization that's taking place within their structures. We hope to be the strategic partner of choice in many of our customers. And I think where the opportunity does come in our reorganization is we were a business that had a significant number of business units. In our legacy 5 years ago, nearly 900. We've narrowed that down. We have a really good customer base. And so what we've done in the reorganization is created a capability for us to engage with the customer base that we do have on a trust basis. With this technology onslaught at the moment, what we want to do is offer the broader range of services now that we've put the businesses together than having isolated individual siloed offerings that we take to market. I mean, I think that's quite an important construct for us because it should be able to extract more revenue than we've harvested in the past.
Yeah. Marius, I have to ask you as you close off the conversation, the proposal of a name change. Just quickly walk us through that decision.
Yeah, I haven't been able to avoid this question today yet, so thank you for that again. Yeah. So look, I think it's been a debate that's been ongoing for a period of time. We embraced our history and tried to make sure that we were transparent in coming clean over the past period. We felt that there was always going to be an element of inevitability. Yeah. The context around iOCO is that initially when the scandal broke in 2019, we started moving our customer engagement contracts as well as our staff contracts across towards iOCO in case we weren't able to sort out what was, in the EOH construct. We've gone through a thorough process over the last 4 or 5 years in making sure that people were comfortable that we rectified as much of the past as we could. And we felt now that with closing out 2 really big legacy items, which we struggled, it's taken us an inordinate amount of time to solve, that this would be a logical juncture that we sort of lower down the EOH and move over to iOCO. It's certainly not going to be a light switch moment.
Okay.
Yeah. So we'll lower the EOH down and we still need some regulatory approvals to make it happen, but we're transitioning towards that.
iOCO, I must say, it does roll smoothly off the tongue. Thank you so much for your insights there, Marius, on those numbers. That was Marius Interim Group CEO at EOH.